Morning everybody, Mike Niemiec here with some opening comments for grain and oilseeds on Monday, August 6th. The overnight trade started off on a wicked note. We were down in the neighborhood of around 5 cents in corn and wheat, down around 30 cents in soybeans, down around $10 in meal, and we're still down there also in the neighborhood of around 30 points in soybean oil. I think people are looking at the weekend rains that came in a little bit better than what the trade was looking for on Friday. We saw in the neighborhood of 0.2 to 0.8 passage of roughly around 95% coverage. Doesn't really solve the drought problem, but enough to go and perhaps give once again a bid lower underneath the market than maybe perhaps the trade would have thought on Friday. We do have another chance of more rain coming through during midweek, another 0.2 to 0.8. Decent coverage again. And the temps are cooling on off from what we have been seeing, so the weather threat has kind of lessened a little bit and once again weighed on our markets overnight. I will say that we did once again open up lower, but have been generally kind of staying stagnant between our sharply lower opening last night for most of the night, even seen some upticking. We're going to get crop progress out after the close today. They're looking for crop ratings to go down 1 to 2% for corn and beans, and this is also once again getting back into those 1988 type numbers when we saw the sharply reduced yields as far as crop production goes. The highlight for the week is going to be the USDA coming out on Friday with their supply and demand report. A multitude of numbers have been coming on out. Obviously, we're ratcheting down the carryout number, and it gets tighter and tighter, and trying to make the numbers work as far as the demand side goes is something that the trade will go realize and see what the USDA says on Friday. We continue to see buyers underneath the market as far as the users go. Over the weekend, we saw a multitude of tender activity in the wheat market. Saudi Arabia of late, buying big chunks of numbers, 290,000 tons from optional origins. Us still being more expensive, but once again, I think the other theme of the marketplace is that these other world suppliers are starting to get, how do you want to say it, the buyers out in the world are out there buying the excess supplies of foreign supplies, and what that's basically doing is they're starting to see their prices start to increase even though we're a little bit more expensive. As far as the soybeans go, South America still remains very high priced, so that continues to be an underlying supportive feature for the soybeans and soybean meal here in the U.S. So a little bit of a defensive start, but to go and say the fundamentals changed greatly, I think it's more or less positioning more than anything else. USDA on Friday, and these are once again my opinions, not ADM or ADMIS. Thank you.